Welcome Cryptopians to Total Crypto Updates, bringing you another video for real deep dives into the crypto industry. Please remember to like, share, and subscribe to help the progress of the channel and community. I can't promise to only speak about crypto, but I can promise everything will be understood. Let's dive into today's very dense crypto update.
Let's begin with a total analysis of XRP, the cryptocurrency of the Ripple network, has declined nearly 5% in 24 hours, reaching a low of $2.39 before stabilizing at $2.40 amid intense selling pressure and a broader market downturn that saw the total crypto market cap drop around 4% to $3.59 trillion. Notable declines included Bitcoin and Ethereum, influenced by security breaches and a lack of positive market catalysts. Analysts are concerned about XRP's technical weaknesses, identifying support levels that, if breached, could result in further declines. Despite a 20% fall over the last month, there is cautious optimism regarding an anticipated XRP ETF launch this month, which may enhance institutional interest and market sentiment. However, the current volatility emphasizes the risks faced in the crypto space and suggests potential ongoing downturns unless support levels hold and regulatory conditions improve. Moving on to mining innovation and partnerships. HIVE Digital Technologies Limited, a company that mines Bitcoin and develops digital infrastructure, has reached a major milestone by achieving a global Bitcoin mining capacity of over 23 exahash per second, EH/s. This represents a 283% increase in hashrate capacity compared to the start of the year, highlighting the company's rapid growth in the cryptocurrency mining sector. In addition to its mining operations, HIVE is expanding into the high-performance computing, HPC, and artificial intelligence, AI markets by repurposing its infrastructure to support these emerging technologies. The company has acquired 32.5 acres of land in Grand Falls, New Brunswick, adjacent to its existing site, to build a Tier 3+ HPC data center. This new facility is designed to host more than 25,000 next-generation GPUs, which are specialized processors critical for AI and HPC workloads. The data center will utilize renewable hydroelectric energy, aligning with HIVE's strategy to leverage sustainable energy sources for its operations. This move is part of a broader shift in the industry, where companies are increasingly using their computing infrastructure to support AI and HPC applications, in addition to cryptocurrency mining. HIVE's HPC subsidiary, Buzz HPC, plans to support over 30,000 GPUs for AI cloud workloads, indicating a significant commitment to this growing market. The expansion into AI and HPC is driven by the increasing demand for sustainable and scalable computing solutions, particularly from hyperscalers and enterprise clients. By combining its expertise in Bitcoin mining with its new focus on AI and HPC, HIVE is positioning itself to capitalize on the convergence of these technologies, which is expected to drive further growth in the coming years. For more on mining, for the mining enthusiasts, we have Cipher Mining, initially focused on cryptocurrency, is pivoting towards artificial intelligence, AI, by signing a $5.5 billion, 15-year lease with Amazon Web Services, AWS, for 300 megawatts of high-performance computing, HPC capacity aimed at AI applications. This strategic shift was announced on November 3, 2025, with the phased deployment starting in July 2026. The deal comprises both air-cooled and liquid-cooled server racks essential for managing AI's intensive computational requirements. Following the announcement, Cipher's stock, CEFR, rose by 19%, reflecting strong investor interest, similar to peer IREN, which saw a 21% increase after a $9.7 billion deal with Microsoft for AI cloud services. Cipher's transition towards AI caters to the rising demand for robust power and computing resources from major tech companies, leveraging its existing expertise in energy management and data center operations. Furthermore, Cipher has taken majority control of a joint venture to develop a 1 gigawatt GW data center named Colchis in West Texas, projected to be completed by 2028, linked to a strategic power supply agreement. In Q3 2025, Cipher reported $72 million in revenue and $41 million in adjusted earnings, bolstered by the AWS deal and an earlier $3 billion contract with FluidStack and Google, totaling about $8.5 billion in AI hosting agreements. This evolution highlights a broader trend where cryptocurrency mining firms repurpose their infrastructures to meet the escalating power and computational needs of AI, particularly in non-traditional markets like Texas. CEO Tyler Page expressed optimism about Cipher's leadership in this area, supported by validation from Tier 1 hyperscalers in an increasingly competitive landscape facing power supply challenges. Getting a little off topic, we have Tesla, known for its electric vehicles, is expanding into the energy sector with large-scale battery storage solutions called energy storage systems, ESS. These systems store electricity from renewable sources like solar and wind, ensuring a steady power supply during high demand or outages. This move is essential as both electric vehicles and the energy sector benefit from improved battery storage, helping to lessen the reliance on fossil fuels. In late 2024, Tesla announced a partnership with Samsung SDI to secure over $2.11 billion worth of ESS batteries over 3 years. This deal highlights the growing need for battery suppliers in the EV industry. Tesla aims to enhance its energy storage products for homes and utilities, while Samsung SDI plans to strengthen its presence in the U.S. market and expand its battery production capabilities with new types of batteries. Samsung SDI reported lower revenues due to fewer EV battery sales but gained profits from business changes. The supply deal will help Tesla boost its ESS deployment, supporting electric vehicle technologies and making clean energy adoption easier. Looking ahead, Samsung SDI expects better earnings with increased demand for EVs and ESS in the U.S., along with innovations in battery technology. Next we have LM Funding America Incorporated has announced a stock repurchase program to buy back up to $1.5 million of its common shares, which is about 15% of the company's current outstanding shares. This decision is made during a challenging time for crypto-related businesses, where stock buybacks help increase shareholder value and stabilize share prices. The program was approved by the board on November 3, 2025, and allows for flexible repurchases until the end of 2026 unless extended. The company's leadership believes the current stock price does not represent their assets well, including profitable Bitcoin mining and a steady lending portfolio. In the third quarter of 2025, LM Funding reported revenues of $2.1 million, a significant increase from the previous year. The buyback could improve stock liquidity and value, as fewer shares can lead to higher prices if demand stays the same. This strategy illustrates how traditional financial practices are being used by mining firms to adapt to market changes and attract more investors. Moving on to real innovation with StarkWare, an Israeli blockchain technology company founded in 2018, focuses on scaling Ethereum using zero-knowledge proofs, ZKPs. These methods allow for private transactions without revealing underlying data. On November 3, 2025, StarkWare announced a new proof system that enhances privacy and decentralization in Web3 applications, based on its Stark technology. This system includes features like recursive proofs and compatibility with Ethereum Layer 2 solutions like StarkNet, enabling developers to create decentralized apps, dApps, with encrypted user data. Key improvements allow for quicker proof generation and support privacy-enhancing techniques. This development addresses the need for privacy in DeFi and NFTs, especially with regulations like the EU's MiCA framework. The innovation aims to reduce Ethereum's transaction fees and support mass-market applications in various sectors, positioning StarkWare as a leader in promoting a privacy-focused blockchain ecosystem. Now, on to more plans, deals, and integrations. Animoca Brands, established in Hong Kong in 2014, is a key player in the Web3 ecosystem, focusing on investments in blockchain gaming, decentralized finance, DeFi, decentralized science, DeSci, and artificial intelligence. The company supports over 600 startups and promotes innovation in the crypto space, emphasizing user empowerment through blockchain technology for secure and transparent transactions. In a notable move to connect cryptocurrency with traditional finance, Animoca Brands is planning a Nasdaq listing via a reverse merger with Current Group, a Nasdaq-listed fintech firm. This deal, which is in the early stages, involves Current acquiring all shares of Animoca, resulting in a new entity that will operate under the Animoca name. The merger is expected to close in 2026, allowing global investors access to digital assets. This merger is seen as a strategic leap to create the first publicly listed digital assets conglomerate, uniting blockchain with AI and real-world asset tokenization. The move aims to enhance legitimacy in crypto gaming, attract institutional investment, and support the integration of crypto into everyday finance, potentially inspiring other Web3 companies to pursue public markets. Next, let's talk a little about privacy token Dash, a privacy-focused cryptocurrency launched in 2014, known for its fast transactions and user anonymity through features like Private Send. It operates alongside other privacy coins like Monero and Zcash, appealing to users who value financial confidentiality amid growing regulatory scrutiny. Currently, Dash's price movements resemble Zcash's patterns seen in late 2025, as both coins have been in multi-year descending channels since 2017. An upward breakout from this channel often indicates a bullish reversal, as demonstrated by Zcash's significant price surge after its breakout. Dash is trading near the upper limit of its 7-year descending channel, showing strong buying momentum with an RSI around 78.70. A successful breakout above the resistance level of $98 to $100 could lead to a 400% price increase. Demand for privacy coins is increasing, with the market for them rising by 80%, enhancing Dash's potential for growth. However, if Dash fails to break out, it may face corrections to $69 or lower, echoing previous price declines. The future for Dash relies on maintaining this momentum, with potential gains if the breakout occurs and caution necessary if support levels are lost. In a significant move, the European Union has introduced the Markets in Crypto Assets Regulation, MiCA, aiming to standardize cryptocurrency rules across member states by 2024. This framework is designed to enhance consumer protection and financial stability, particularly focusing on stablecoin issuers and crypto service providers. Why it matters? MiCA represents the EU's most ambitious effort yet to regulate the burgeoning cryptocurrency market, addressing critical concerns over financial sovereignty and the operational integrity of stablecoins. Its comprehensive approach could set a global standard for crypto regulation. ZeroHash, a Chicago-based firm, has secured a MiCA license, positioning itself as a key player in providing regulated crypto asset services across Europe. This move underscores the EU's commitment to fostering a secure and innovative digital finance ecosystem. With stablecoins dominating 99% of the $230 billion global market, the EU's regulatory stance could significantly influence the future of digital transactions and the broader financial landscape. As the EU advances its digital payments agenda with projects like the digital euro, MiCA's rollout marks a pivotal moment for the integration of stablecoins into mainstream finance, promising a more unified and secure financial ecosystem in Europe. Next, we move on to how mobile mining apps are gaining traction as a more accessible alternative to traditional cryptocurrency mining, offering a way into the market without the need for costly equipment or deep technical knowledge. CryptoEasily's new app promises zero-cost mining with an eco-friendly twist, leveraging renewable energy and AI to optimize profits. Why it matters? This trend could democratize cryptocurrency mining, making it feasible for a broader audience while addressing environmental concerns. However, the high returns promised by such apps warrant scrutiny, given the volatile nature of the crypto market. By utilizing green energy and AI, CryptoEasily aims to mitigate the environmental impact of mining and simplify the process for users. This approach reflects a growing emphasis on sustainability and inclusivity in the crypto space. Traditional mining's energy consumption often surpasses that of entire countries, highlighting the need for sustainable alternatives like CryptoEasily's model, which taps into geothermal and wind power. The app's claim of daily earnings up to $1,000 raises red flags about the sustainability and realism of such profits, underscoring the speculative risks inherent in cryptocurrency investments. The bottom line: while mobile mining apps like CryptoEasily offer an innovative and inclusive path to cryptocurrency mining, potential users should remain cautious of the speculative risks and the sustainability of promised returns. Next is on how President Donald Trump has shifted U.S. policy towards a supportive stance on cryptocurrency, aiming to make the country a global leader in digital assets. This includes overhauling regulatory frameworks and establishing a federal crypto reserve with seized assets. Why it matters? This policy reversal signifies a major change in the U.S. government's approach to cryptocurrencies, potentially positioning the country at the forefront of global financial innovation and securing its economic dominance. The potential for regulatory clarity has sparked optimism among institutional investors, particularly regarding stablecoins like XRP, which could see increased adoption and investment as a result of more favorable legislative conditions. Trump's pro-crypto policies could catalyze significant growth in the cryptocurrency sector, encouraging innovation and attracting institutional investment by providing regulatory clarity and stability. Following the announcement, Bitcoin's price surged to $107,141.01, with a market cap of $2.14 trillion and a 24-hour trading volume of $45.28 billion, indicating a strong market response. The U.S.'s new pro-crypto stance, highlighted by the creation of a federal crypto reserve and regulatory reforms, could reduce market volatility and foster long-term sector growth, reshaping the future of finance. On to the final story on the former bigwig Sam Bankman-Fried, SBF, founder of the FTX exchange, now faces serious legal consequences after being convicted on multiple charges, including wire fraud and securities fraud, for misappropriating over $8 billion in customer funds to support his hedge fund, Alameda Research. The legal proceedings, stemming from the collapse of FTX in November 2022, revealed a crisis in the cryptocurrency market, leading to significant financial losses for customers and prompting regulatory scrutiny from agencies like the SEC and DOJ. SBF was sentenced to 25 years in prison and an $11 billion forfeiture, though he is appealing the verdict, citing concerns over judicial biases and limitations on defense arguments at trial. The appeal process, scheduled for oral arguments in November 2025, represents SBF's strategic effort to challenge the procedural aspects of his trial rather than the substantive evidence against him. Notably, former SEC Chairman Jay Clayton is assumed to lead the prosecution, suggesting a complex interplay between regulatory actions and SBF's alleged misconduct. Meanwhile, SBF's defense attorney, Alexandra Shapiro, contests the trial's adherence to due process under the Sixth Amendment. SBF maintains that his arrest was politically motivated, asserting his commitment to pro-crypto legislation was undermined by the Biden administration's actions. As of November 3, 2025, the outcome of SBF's appeal could create significant volatility within the cryptocurrency market, where FTX's token has experienced fluctuating values amid speculation. A favorable ruling for SBF may challenge SEC actions perceived as overreach. Conversely, a dismissal could enforce stricter compliance measures within the industry, leading to a more regulated environment capable of instilling investor confidence. This case underscores the urgent need for regulatory frameworks in a rapidly evolving sector and highlights how judicial outcomes can shape the future landscape for digital assets within global finance, emphasizing lessons learned from high-profile failures. Alameda's former CEO and SBF's ex-girlfriend, who received a reduced 2-year sentence for her cooperation, paints a picture of deliberate criminality rather than mere mismanagement. As of November 3, 2025, the appeal's shadow looms large over the recovering crypto market, where FTX's native token, FTT, trades at 91 cents with a $297.69 million market cap, buoyed by a 98.55% surge in 24-hour trading volume to reflect speculative bets on reversal outcomes, yet tempered by a 2.64% dip over 90 days amid lingering stigma. Experts at Coinco warn that a successful rehearing could precipitate retrials, injecting volatility into assets tied to FTX's ecosystem and potentially softening enforcement precedents, while an upheld conviction might reinforce compliance mandates, encouraging exchanges to adopt stricter audits and reserve proofs to rebuild investor confidence. Broader implications extend to the crypto industry's maturation, as this case, often dubbed the Enron of crypto for its scale of betrayal, highlights the perils of unchecked innovation in a lightly regulated space, where appeals processes, governed by federal rules of appellate procedure like Rule 40 for rehearings N-Bank, serve as safeguards against miscarriages of justice but can prolong uncertainty, deterring institutional inflows until resolutions emerge. Looking ahead, a favorable ruling for SBF might embolden challenges to SEC overreach under the incoming Trump administration's pro-crypto pivot, fostering a more innovation-friendly environment, whereas rejection could cement accountability norms, ultimately fortifying the sector against future implosions and paving the way for sustainable growth as digital assets integrate deeper into global finance.
Thank you for watching. There will be more videos on the crypto world. We try to buff out the FUD and keep everyone's attention on development and important events in the crypto world. The tech is amazing and understanding it can take you a long way.